Hey everyone, welcome back to another dividend investing video. Huge news today that shook the markets on an earnings call after market close. Facebook parent company Meta, ticker META, declared a 50-cent dividend, its first ever. On the news, shares of Meta exploded after hours, shares up over 15%. So I'm going to briefly talk about this, take a quick look at the company, and decide, is this a company those of us who are dividend investors should be buying? And I want to hear your opinion in the comments about Meta. Do you think it's a buy, a hold, or a sell? Are you a shareholder yourself? Let's talk Meta. I'm Nick, and this is the Dividend Growth Income channel. Thank you for joining me today. I'm not a financial advisor or guru. I'm just a regular guy who wants to share my love of dividend growth investing and building financial independence with passive income. If you could, please do me a favor, smash the like button and subscribe to keep up with future videos. This helps us out more than you can imagine with the algorithm, so we can bring you more quality dividend investing content. So on January 31st, Meta announced its Q4 and full 2023 earnings. Facebook saw a 6% increase in daily active users year over year. The top line was up 16% year over year, with $134.9 billion in revenue. Costs went up by 1%. And then the big news, Meta's board of directors declared a cash dividend of 50 cents per share, payable on March 26, 2024, to the shareholders of record as of the close of business on February 22nd. They also stated their intent to pay this cash dividend quarterly, subject to market conditions and board approval. So Facebook is now a quarterly dividend stock. It looks like they're going to be one of those March, June, September, December payers. And even more big news, they announced they have allocated $50 billion for share repurchase authorization. So lots of shareholder value being returned at Facebook. Now, I'll tell you now that I don't believe the fact that Facebook is now a dividend stock is a reason to go out and start buying it, not for the dividend alone. And unless your plan is to use your shares only for income and you're at that stage, you should never buy a company solely for its dividend, okay? That's not to say Facebook can't be a decent investment at this time. They certainly do a lot of the stuff we as dividend growth investors love to see. And guys, I know it's Meta, but I've known this company for years and years as Facebook, just like I still call Alphabet Google. I still don't think they should have changed the ticker from FB to Meta, but that's just me. They are now Meta Platforms Inc., formerly Facebook Inc., and I still call them Facebook really just out of habit. Now, in addition to Facebook, they own Instagram, Threads, and WhatsApp. The vast majority of their revenue comes from advertising. Man, the stock has been all over the place, but over the last 10 years, it's up over 500%, more than double the broader market. And it's had one hell of a year over the last 12 months, up 158%. Today, it's sitting near its 52-week high. Now, that wouldn't necessarily mean it's overvalued, right? Because likewise, the stock at its 52-week low doesn't necessarily mean it's undervalued. Now, the forward PE of 27.1 is 18% above Meta's 5-year average PE of 23, suggesting the stock could be in overvalued territory. Seeking Alpha gives it a valuation grade of D. This is relative to the communication sector. If you're concerned with valuation, maybe it's not the right time to buy Facebook. Now, as far as the dividend goes, it's not a lot. Forward yield is at 0.51% right now. Today, Meta is sitting on over $50 billion in cash reserves. And with a dividend at a mere 15% payout ratio, there is still ample room for Meta to continue growing both its business and this new quarterly dividend payment. SimpliSafe Dividends can't yet assign a safety score to Meta, but as my buddy Russ pointed out, given the ease at which Facebook can pay out this dividend, the safety score is likely going to be in the high 90s. Check out this growth in free cash flow per share. It's astonishing, really. In the last 10 years, it's gone up from $1.18 to nearly $15 per share. It's grown by 12 or 13 times, right? Revenue growth over the last decade has been insane. In 2013, it's grown from $7.87 billion to $127 billion over the last year. Astronomical growth on the top line. Shares outstanding are declining over the last few years, and they will be taking even more shares off the market in 2024 with their newly announced $50 billion buyback plan. Return on invested capital has been over 20% year over year since 2016. It's been at 24% over the last 12 months. We love to see firms that have high ROIC. We at least want to see this over 10% ideally. So Facebook doing terrific there. Extremely profitable with operating margin of 34% and a free cash flow margin of 30%. This company carries more cash than they have debt on their balance sheet. a $1 trillion market cap tech giant. Wall Street analysts love the stock, seriously love the stock. It's rated 4.5 out of 5, a strong buy. 41 analysts rated a strong buy, 9 a buy, 7 a hold, and only 2 a sell. And Seeking Alpha analysts and writers are also super bullish on the stock. We even have folks calling it super cheap, right? And if you believe they can sustain this growth momentum and profitability, perhaps its valuation will continue to climb as it has been, right? It's what it's been doing. The average analyst price target is $393.45, 0.34% downside. It's not actually taking into account the after hours activity from when I'm recording this. So shares are actually right now $454.81. So analysts don't see upside right now, but who knows what'll happen. And I'll just say, it could be a month from now, a year from now, or a decade from now. But at some point, we're also going to see fellow big tech giants, Amazon and Alphabet/Google, begin issuing out dividends as well, I believe. I think it's inevitable as these companies mature. These are massive companies that practically print money. And for investors with a lot of time on your side, buying into companies like that now, that either pay a very small dividend like Facebook does now, or say Visa or MasterCard, or companies like Amazon or Google that don't yet pay a dividend, could pay off handsomely further into the future. And think of the yield on cost someone who purchased Facebook some time ago could have on their shares today. In fact, we don't have to imagine. One of my followers on Twitter, that's Spanky and Spronkle, God love the internet, they have a yield on cost of over 6%. Awesome. It's amazing that Facebook is returning value to shareholders now in the form of dividends. Very happy to see it. Not an owner of the stock myself, and I don't plan on taking out a position anytime in the near future. Remember that this is a company that is consistently in the news for controversy, so opportunities are going to present themselves to the patient investor. It is an extremely volatile stock with a beta of 1.87, so just be aware of that. It has fallen from highs like this before and in epic proportions. You could end up losing your ass. And it's a fantastic company, though. I do see it fitting in a long-term portfolio. For right now, I'm going to keep it on the watch list. I'm just glad we have another stock we can talk about now, right? And I want to know what you think of it down in the comments. All right. And I thank you guys so much for watching. If you want to stick around, click into this next video. You can see my portfolio performance over the month of January 2024. We are now over $20,000 in that portfolio. Until next time, my friends, keep investing.